Hello, my name is Jake Elison, and I'm giving a presentation on to bundle or not to bundle. This is for the Accounting 6650 class with Dr. David Christensen, and let's get started. So, I chose Situation 3 out of Chapter 5 in the book by Chaffers and Pakaluk called Understanding Accounting Ethics. So the situation that Situation 3 presents is that there is a financial controller and he's looking at doing a big write-down that's going to kind of impact the company on some intangible assets that they have. And it's real. They need to do it. They know they need to do it. And the CFO kind of takes the controller aside and he says, I've been thinking maybe we should use this as a situation to write down a whole bunch of things so we can write it off as an extraordinary item and we can get some big benefits out of it in the future. And so automatically there's some red flags going up saying, hey, this isn't right, this is out of the ordinary. And so now we're in the dilemma, what do we do? And the book gives four possibilities or four options of things that we could do. And the first one is that you just do what the CFO wants. You say, all right, well, I can kind of see what he's saying here. I think I can squeeze this into gap so we're official and everything's done in accordance with gap, and we just know that's wrong. That's blatantly wrong. So the second option that we can do is we can just ignore what the CFO said. We can say, you know what, he's a little crazy. I'm just going to write it down the way I know that we should and send it through. If anybody says anything, we'll deal with it after that. But for now, I'm just going to ignore it. When this is an okay answer, but I believe there's a better answer. And so if we move on to possibility 3, this is kind of like that we can have our cake and eat it too. And so what the controller is thinking is he's like, I could do exactly what the CFO said. I could take all these items and I could write them all down so we get this big benefit in the future. And I could, hide it throughout the financial statements. And I could make it so it was so obscure that shareholders and people looking at the financial statements wouldn't really understand what's going on. And that is obvious fraud. And he's in some dangerous ground there. He really needs to stay away from that possibility, or option 3 is a terrible option. So if we move on to the last possibility, the book gives possibility 4. It talks about, you can just write it up the way the CFO wants, get all the entries ready, and then you can submit it to the audit department and see what they say. Kind of let them say, okay, this is something we're going to do, or no, this is way out of line. And so possibility 4 is again an okay thing that I'm sure happens, but I don't think it's the best practice. So I give the a response to that. I think we should absolutely not write all the items down. We should just take what's real. I think that's part of what's being conservative. As accountants, we focus on being conservative. That is recognizing losses more than we're going to recognize gains. And setting ourselves up for a big future gain doesn't really seem very conservative. So I would not do the bundling. I wouldn't do this big extraordinary item. And I would also talk to the CFO and, kind of get an idea of what's going on. I don't think I just, accuse him in his face of fraud or anything. Tap it out, talk to him and see if this is common, if it's something that we've done before or things like that. And after I was done talking to him and I got a feel for it, I would talk to the CEO if I could, if I had a good relationship there. And or I would talk to the board of directors or the audit committee. And I would help them to, understand what's going on and see if this is something that happens all the time. And hopefully it's not, and hopefully it's something that they'll address and that they'll talk with the CFO and maybe they'll, let him go or see if there's some conduct there that needs to be taken care of. And my last suggestion is that if nothing happens, if the board of directors or the CEO or the audit committee decides that this is okay, I would start looking for another job because your standards and who you are and your career is worth much more. Thanks for watching my presentation.